Hey everyone, welcome back to Corporate Decoder. Today, IMST just filed a semi-annual shareholder report, and I am seeing some interesting movement in their investments. Quick note, this is not financial advice, just my take on public filings for educational purposes. This report shows us how two of the funds within the trust, the Mast Managed Futures Strategy Fund and the Mast Multialternative Strategy Fund, are performing and what they are invested in. Alright, let's dive into this report from Investment Managers Series Trust III. This filing is essentially a deep dive into the financial health and holdings of two specific investment funds managed under this trust. Think of it as a financial checkup for these funds, showing investors exactly where their money is being put to work and how it performed. First up is the Mast Managed Futures Strategy Fund. This fund aims to make money in a way that isn't usually tied to how the stock and bond markets are performing. It's like trying to profit whether the market goes up or down. As of the 30th of April 2026, this fund had about $33 million in total net assets. They reported having 58 different investments in their portfolio. Interestingly, their portfolio turnover rate was 0%. This means they were not buying or selling investments frequently during this reporting period. Looking at the expenses for a $10,000 investment in the class of shares of this fund, it would have cost about $80, that's 1.55% of the investment. For Class C shares, that same $10,000 investment would cost $119, or 2.30%. And for Class I shares, it would be $67, which is 1.30%. So, as usual, the higher the class number, generally the lower the fees. Now, let's get into what these funds are actually invested in. For the Mast Managed Futures Strategy Fund, a big chunk, over 76% of their investments were in short-term assets. The largest portion of this, about 33%, was in money market investments, specifically $10.8 million in a UMB Bank money market special deposit. Another significant part, over 43%, was in United States Treasury Bills. These are very short-term government loans, considered extremely safe. The total value of these short-term investments was over $25 million, but that is not all. This fund is also heavily involved in futures contracts. They had a lot of long positions, meaning they were betting on the price of various commodities like corn, soybeans, and oil to go up. They also had positions in currency futures, betting on the movement of currencies like the Brazilian real and the British pound. And they were into index futures too, which track the performance of stock market indexes. The total value of these long futures contracts was over $42 million. On the flip side, they also had short futures contracts, essentially betting on prices going down. These included positions in metals like lead and aluminum, and also in interest rate futures like US Treasury notes and bonds. The total value of these short contracts was over $82 million. When you look at all these futures contracts together, the fund had a net appreciated value. This signifies gains from these complex derivative trades. Moving on to the Mast Multialternative Strategy Fund. This fund is quite a bit larger, with over $206 million in net assets. Unlike the Managed Futures Fund, this one has a significant portion in common stocks, about 41% of its assets. They also have a large chunk in short-term investments, around 49%. The top 10 holdings for this fund give us a good idea of what they are focused on. We see companies like Corebridge Financial, National Storage Affiliates Trust, and Janus Henderson Group plc, all with around 2% of the fund's assets. Digging into the common stocks, we see investments across a wide range of sectors. They have holdings in semiconductors with over $11 million in names like Advanced Micro Devices and Qorvo. They've also invested in software companies, with significant positions in Clearwater Analytics Holdings and Cantaloupe. Real estate investment trusts or REITs also make up a good portion, with over $8 million in names like National Storage Affiliates Trust. Their short-term investments are substantial too, totaling over $101 million. Most of this, about 37%, is in money market investments, a whopping $76 million in that UMB Bank Deposit. The rest is in Treasury Bills, similar to the other fund. This fund also gets into some really complex financial instruments called swaps. They have numerous equity swap contracts where they are essentially exchanging the return of one asset for another for a specific period. For example, they have agreements with Barclays Bank and BNP Paribas based on various commodity and currency indexes. They are also making payments based on interest rates like SOFR, the secured overnight financing rate, while receiving index returns from counterparties like Goldman Sachs and Societe Generale. The total notional value of these swap contracts is enormous, running into hundreds of millions of dollars. showing a very active and complex derivative trading strategy. Like the other fund, this one is also heavily using futures contracts. They have long positions in commodities like Brent crude oil and agriculture products, and short positions in things like emission allowances and metals. They are also active in currency and index futures, showing a broad reach across different markets. Then we have forward foreign currency exchange contracts. This fund is using these to manage currency risk. They are entering into agreements to buy or sell various currencies like the Australian dollar, Brazilian real, and even the Turkish lira at a future date, on the sell side. They're looking at currencies like the Canadian dollar and the euro. These contracts are all about hedging against currency fluctuations. Looking at the consolidated statements of assets and liabilities, we can see the overall financial picture. For the Managed Futures Strategy Fund, total assets were around $33 million. For the Multi-Alternative Strategy Fund, total assets were much larger, over $215 million. On the liability side, both funds have significant amounts related to their derivatives activities, such as unrealized depreciation on futures and swap contracts. Let's check out the share prices for the Mast Managed Futures Strategy Fund. Class of shares had a net asset value around $8.08, but the maximum offering price was $8.53. Reflecting sales charges, Class A shares were trading at $8.15 for the Mast Multialternative Strategy Fund. Class A shares had a net asset value of $8.87, with a maximum offering price of $9.36. Class A shares were at $8.49. In terms of operations for the 6 months ending the 30th of April 2026, the Managed Futures Strategy Fund had total investment income of about $587,000. Expenses were around $406,000, but a significant portion of the advisory fees were waived, resulting in net expenses of just over $220,000. This led to a net increase in assets from operations of about $2.7 million. The Multi-Alternative Strategy Fund saw much larger numbers. Total investment income was over $2.4 million. After accounting for expenses and waived advisory fees, net expenses were about $870,000. This fund had a significant net realized and unrealized gain of over $11 million from its investments, leading to a strong increase in net assets from operations of over $12 million. For the Mast Managed Futures Strategy Fund, Class A shares saw a positive total return of 8.24% for the 6-month period. However, for the full years ending in 2024 and 2025, the returns were negative, with a 7.33% loss in 2025 and a 9.06% loss in 2024. The ratio of expenses to average net assets after waivers was a consistent 1.55%, which is pretty low. For Class C shares of the Managed Futures Fund, the 6-month return was 7.82%. Again, the annual returns for 2024 and 2025 were negative. The expense ratio here was higher at 2.30%. Class I shares of the Managed Futures Fund, which generally have the lowest expenses, showed a positive 8.38% return for the 6-month period. The annual expense ratio remained low at 1.30%. Now let's look at the Mast Multi-Alternative Strategy Fund. Class A shares had a 6-month return of 6.17%. The expense ratio after waivers was 1.10%. Interestingly, the portfolio turnover rate for this fund was very high at 172%, meaning they were actively trading. For Class I shares of the Multi-Alternative Fund, the 6-month return was 6.27%. The expense ratio was even lower at 0.85%, and the portfolio turnover rate remained high at 172%. The notes to the financial statements provide crucial context. We learn that these funds were formed as series of investment managers, Series Trust III. They also underwent reorganizations, essentially absorbing other funds. For instance, the Managed Futures Strategy Fund took on the assets and liabilities of the Credit Suisse Managed Futures Strategy Fund. Similarly, the Multi-Alternative Strategy Fund absorbed the Credit Suisse Multi-Alternative Strategy Fund. This is a common way for funds to grow and consolidate. They also mentioned that these funds could invest up to 25% of their assets in wholly owned offshore subsidiaries, like Manteo Cayman Managed Futures Strategy Fund. Limited, this is often done for tax efficiency or to access specific investment strategies. When it comes to valuing their investments, these funds primarily rely on quoted prices from active markets for identical assets, which falls under Level 1. For other investments, they use observable inputs from the market known as Level 2. The report states that for both funds, they did not hold any Level 3 securities, which are those valued using unobservable inputs. This suggests they are mostly dealing with liquid, actively traded assets. For the Managed Futures Strategy Fund, the total assets classified under Level 1 were about $12.9 million from futures contracts. Level 2 assets, mainly from Treasury Bills, amounted to over $14.3 million. All their futures contracts were valued either as Level 1 or Level 2. The Multi-Alternative Strategy Fund, because of its broader investment scope, had a much larger portion in Level 1 assets, totaling over $165 million from common stocks and money market investments. Their Level 2 assets, including Treasury Bills, forwards, futures, and swaps, added up to over $31 million. The sections on derivatives and hedging are quite extensive. These funds are using a lot of financial tools like futures, options, swaps, and forward currency contracts. The Multi-Alternative Strategy Fund, in particular, shows a massive engagement with these instruments with notional values in the hundreds of millions. This indicates a strategy that is actively managing risk and potentially seeking alpha through complex trades. The goal here is often to hedge against market movements or to gain exposure to specific markets without directly holding the underlying assets. Looking at subsequent events, we see a significant planned change for the Mast Managed Futures Strategy Fund. The fund is planning to reorganize into an exchange traded fund or ETF. This is subject to shareholder approval, which they have received. The idea is to transfer all assets and liabilities to a new ETF under the same trust. This move is expected to be tax-free for shareholders, and the cost will be covered by the advisor. This is a trend we see a lot in the fund industry, as ETFs can offer advantages in terms of trading and lower costs for investors. Scroll no. Let's get to my take on all of this. These filings paint a picture of two funds with very different strategies. The Managed Futures Strategy Fund appears to be playing it very safe, with a heavy concentration in short-term government debt and a 0% turnover rate. This suggests a strategy focused on capital preservation rather than aggressive growth. On the other hand, the Multi-Alternative Strategy Fund is much more dynamic. Its high portfolio turnover and extensive use of derivatives like swaps and futures show an active approach to managing risk and seeking returns across various markets. This strategy comes with higher complexity and potentially higher risk, but also the possibility of greater rewards. The recent reorganizations and the planned transition of the Managed Futures Fund to an ETF signal ongoing adaptation in the fund management industry. What I am most interested in watching is how actively the Multi-Alternative Strategy Fund manages its complex derivative positions, especially given the high turnover rate. The risk I am watching is that these intricate strategies could lead to unexpected losses if market conditions shift unfavorably. The recent positive performance in the 6-month period is encouraging, but the negative returns in prior years for some share classes are a reminder of the volatility in these types of strategies. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.